Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also, you can post questions, comments, content related to my presentation, as well as the Options-Doug chat channel in the Bookmap Discord Options-Doug chat channel. So that's a great place for questions, comments, as well as your own content related to options, order flow, and hedging flow. And for those of you in YouTube, again, if you have questions, especially after the webinar, the best way to get in touch with me is through Discord. And then finally, I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution, and I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups, for entries and exits. And when I talk about setups today, I will be talking about an underlying asset. Setups can be taken any number of ways. For example, the S&P 500, that can be taken with ES futures, with SPY shares, SPY options, or SPX options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel in Discord as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. All right, let's get started. My agenda for today: first of all, I want to go over news items, economic data, events, and earnings for the upcoming week. For the rest of the week, there is nothing today. Then I'll go through my positional analysis, my planning process for the morning. Then I'll review some setups from this morning, and then I'll talk about the live market. And when I get to the live market, if you have any questions, any stocks you want me to take a look at, please let me know. So again, when I get to the live market, if you have stocks you want me to take a look at, please let me know. All right, news items. Really, the news for the week begins tomorrow. The CPI report comes out at 8:30 a.m. Eastern Time. Then on Thursday, the PPI data comes out, and also retail sales, again at 8:30 a.m. Eastern Time. And then Friday is the big September quarterly expiration. So this is really the monthly expiration, but a lot of open interest is concentrated in the March, June, September, and December monthly expirations. We'll see that in just a minute. And then also on Friday, the Michigan Consumer Sentiment is out at 10 a.m. All right, so that's the news for the week. We'll wait for CPI and PPI data out coming up tomorrow and Thursday. Let's take a look at some additional information that may inform us about this upcoming expiration. This is SPX expiration concentration. What this chart is showing is delta notional on the vertical axis and then the expiration date on the horizontal axis. So this is the September expiration coming up this Friday, and the orange bar is showing call delta notional and the blue bar is showing put delta notional. And just by looking at the appearance of the bars, it seems that this expiration is slightly call dominated. We can hover over and see the numbers there, and it looks like that is definitely call dominated. There's more call delta notional than put delta notional, and that can potentially have an impact after expiration. Those calls that are supporting the market in a more of a positive gamma environment, mean reverting environment, will expire, and that could lead to increased volatility and potentially a short-term drop after the expiration. That's the opposite effect of a put-dominated expiration, like August. We'll take a look at that in just a minute. All right, so that is SPX, slightly call dominated. Let's just take a look at SPY. Much more call dominated for SPY, and the same for QQQ. Even more so for QQQ. Much more call dominated. Again, we may look for increased volatility after expiration as those calls that are supporting the market expire. All right, so that's news, just pointing out the potential for this call dominated expiration coming up Friday, and a potential for increased volatility after the expiration. All right, let's start with positional analysis now. I'm going to start with the S&P 500. This is ES Futures in Bookmap. And before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to SPX and a 30-day 1-hour chart and Thinkorswim. And note, this is the August monthly expiration, 8/18, and this is what I was talking about, more of a put-dominated, very negative gamma expiration, and puts expired. Market makers could buy back short hedges, leading to a put vanna rally after that expiration. We may look for the opposite in a call-dominated expiration. And note that as the rally continued, this negative gamma position gradually shifted to positive gamma, back to negative gamma, and then again today back to positive gamma. That's market makers' position on the gamma curve. Currently slightly positive for SPX. I'll talk more about that in a few minutes. All right, let's take a look at some levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. And then the dashed blue lines are showing the lower and upper daily expected move. Again, based on the options market. That changes every day, once a day. Let me point out the Spotgamma levels on this chart. I'll talk about the key daily levels. These are Spotgamma proprietary gamma levels, Spotgamma levels. These are the gamma weighted open interest. The first is the put wall. That is the strike with the largest net negative gamma that can be expected to act as support. That is at 4,400. The next level up is the volatility trigger, and that is at 4480. And that is Spotgamma's proprietary gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to increase or enhance volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. The next level up is the 4500 level. That's the absolute gamma strike. That's the strike with the largest absolute gamma, negative and positive. And note that level did shift up from 4450 yesterday to 4500. So a positive shift higher in the absolute gamma strike. For SPX, the volatility trigger also shifted higher from 4470 yesterday to 4480 today. And then finally, the call walls at 4600, that's a strike with the largest net positive gamma that can be expected to act as resistance. So that level also shifted higher from yesterday, from 4550 yesterday to 4600. So for SPX, the volatility trigger, call wall, and absolute gamma strike all shifted higher. So bullish shifts higher in the key daily levels for SPX. All right, let's take a look at one other SPX chart just to get a sense for the levels that are in play for today. This is a one-day chart. Just quickly point out the SPX traded down below the lower daily expected move for the day, and is now did find resistance at the 4480 volatility trigger. Now maybe finding support at that level. So those are the primary SPX levels in play for today. The lower daily expected move, also that 4480 volatility trigger. All right, let's take a look at Bookmap now. In Bookmap, I have my own cloud notes, and I'm showing the SPX levels. There's the 4480 level, resistance, now maybe acting as support. There's the lower daily expected move, that's for ES. That's a little bit different than the SPX. And then here are the SPY levels. There's the SPY 447 volatility trigger, and then also the SPY 448 level. That's a large gamma 2 level. All right, so those are the SPX and SPY levels that are in play for the S&P 500. Note that I am looking at the December contract now, the Z contract. So the difference, the ES to SPX difference, has widened out quite a bit. Last week with the September contract, that difference was about 3.5 points, and today it is 51 points. So ES minus SPX using the December contract is 51 points today. So that's what I'm using. Actually, 51 points. So that's why I'm showing the SPX 4480 level at ES 4531. All right, so that's the levels. SPX levels shift higher. Also for SPY, volatility trigger also shifted higher. Put wall actually shifted lower, and the absolute gamma strike shifted higher. All right, so overall for the S&P 500, bullish shifts higher in levels. And these are the levels in play for today. Let's take a look at NASDAQ. This is NQ futures. And Slotazari, I'll get to your question in just a moment. And yeah, there is a higher expected move for tomorrow. Actually on the CPI event. I'm not sure about the Apple News event, but for CPI there is. All right, so this is NASDAQ. Let's take a quick look at a QQQ chart just to isolate the QQQ levels in play for today. And none really, and this other than this L3 level at 375. And if you recall yesterday, QQQ seemed to have more respect for the round number levels, not so much today. All right, so that's QQQ. And for QQQ, the volatility trigger did shift higher to 377. So QQQ is trading below its volatility trigger. The put wall shifted lower from 370 to 360 today, and the absolute gamma strike shifted higher. And actually this 375, that is the absolute gamma strike. It's labeled an L3 here, but that is the absolute gamma strike. And just for completeness, let's take a quick look at an NDX chart. So here's NDX. There are a couple levels in play for today. It looks like this 400 level, 15,400, large gamma 2, L2 level, did act as resistance, and now NDX is trading below its volatility trigger at 390. All right, let's go back to Bookmap. So again, I've got my cloud notes here showing QQQ levels. There's the 375 absolute gamma strike. Then there's the 400 and the 390 NDX levels. I've also got the big round numbers for NQ. The 650 level did act as resistance. And it looks like now this NDX 400 level acted as resistance. All right, shifts in levels for NDX, volatility trigger shifted higher, absolute gamma strike shifted higher. And again for QQQ, volatility trigger shifted higher, put wall lower, and absolute gamma strike shifted higher. So overall, bullish shifts higher in the key daily levels, and volatility trigger did shift higher across the board for all instruments, and also the absolute gamma strike also shifted higher across the board. We'll talk about setups in a few minutes. And let's wrap up the positional analysis. I'm going to go back, take a look at a little bit of data here. Look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. This gives us a sense of how market makers may react. And we'll see a graphical picture of this in just a minute with changes in price and applied volatility. And what this is showing is market maker's position on the gamma curve at the beginning of the day for SPX was slightly positive, so shifted back to positive. Still negative for SPY, and then slightly negative for QQQ. This is market maker's position on the gamma curve at the beginning of the day. Again, slightly positive for SPX now at the beginning of the day, indicating that in this part of the gamma curve, traders are short calls, market makers are long calls, and they have to hedge against price to hedge they have to trade against price to hedge their delta exposure. So overall, a pretty neutral picture for gamma notional. These numbers all did increase from yesterday, either becoming positive for SPX or less negative for SPY and QQQ. Let's take a quick look at the Vanna model so we can get a graphical illustration of what this means. Let's go back to SPX, and they're all pretty similar. Zoom in on this chart. What this chart is showing is market makers delta notional on the vertical axis, price on the horizontal axis. Two curves on this chart. The first, light gray curve, shows how market makers delta notional changes with changes in price only, and the purple curve adds implied volatility to the equation. This shows how market makers delta notional changes with changes in price and implied volatility, and that change in delta with a change in implied volatility is the Vanna effect, and Vanna is a second order Greek. All right, let's take a look at some prices on this chart. So first of all, SPX, the low for the day was around 44.63. Somewhere around here between these two lines. So what this is indicating is as price moved up, implied volatility drops, and market makers could buy back short hedges. So this is a slight Vanna tailwind up to a certain point. Let's see where SPX is trading right now, about 44.77. All right, so much less, if price continues to increase, some of that put Vanna fuel has already been burned up. And Ollie asks, anything on your chart showing reasoning behind the NDX pop and subsequent drop? We'll take a look at that in just a minute. I don't know if there's any news or not. All right, so the Vanna models are pretty similar for QQQ, SPY as well. All right, let's get to setups now. Before I do that, I want to take a look, first of all, at Sloto Dazari's question in Discord. Says there is volatility during the current Apple News event on Apple stock and ES. So I'm not quite sure I understand what you're looking for there. Let's take a look. So first of all, this is an options chain for SPX. You know, let me just isolate this. So I'm showing just today and tomorrow here. So this is SPX. And at the beginning of the day today, the expected range for the day, actually at the end of yesterday, at the close yesterday, was about 20 points, plus or minus 20 points. Today, I'll take a look at this at the close, but right now, the expected move for this would be for tomorrow is plus or minus 31 points. So I'll make a note of that at the close today. This is based on the CPI data tomorrow. So about the Apple News event, I doubt there's any additional volatility. We'll take. Oops. So without daily options for Apple, it's hard to say. So right now, for the end of the week, the options market is pricing in plus or minus 4.8 points. All right, so I'm not sure I understand that. All right, so let's take a look at setups now. Well, maybe there is, maybe that is the cause of the move. We'll take a look in just a moment. All right, so let's go to Bookmap. All right, so this 130 move in NASDAQ and ES could be related to Apple. So thanks for pointing that out. All right, so also a sharp drop in Apple there, right around 130. So it appears that the Apple event, Apple News, is disappointing. Let's just see if that move is shows up in any other stocks. We'll take take a look at Tesla. Also a sharp move lower. Not so much in Nvidia. A little bit of Microsoft. Meta. All right, slow to Zori. I'm not quite sure what that means. Google a little bit maybe. Amazon. This move actually preceded the move. All right, let's get some setups now. Let's go back to the S&P 500. So Ollie, maybe that answers your question. Maybe this has something to do with the Apple event, Apple News. And Holy Trinity, hello, glad you're here, welcome. All right, so let's take a look at Hero now. I'm going to start with the S&P 500. And let's go back. So what this chart is showing is SPX price and the Spotgamma Hero signal, hedging impact real-time options. This is showing options trades and market maker hedging activity for a combined signal for SPX, SPY, XSP, and ES futures. So if you trade any form of the S&P 500, this is what you want to take a look at. All right, let's zoom in on this chart and point out a couple of things here. So it looks like options traders really had a mean reverting mean reverting activity today in the options market, meaning they were selling highs, buying lows. So let's take a look at a couple of setups. So first of all, very similar to yesterday, options traders fading the move higher, started taking negative delta positions, price moved lower, and then started taking positive delta positions, price responded higher. So those are the two morning setups, and then we'll take a look at this in just a few minutes. So very similar to yesterday, a divergent short at the open, and then a divergence long. Let's go take a look at Bookmap now. Zoom in. All right, so yesterday was the playbook, very similar. So we know at the open. There's a sharp move higher as options traders were taking negative delta positions. Price made series of lower highs, giving you multiple opportunities for short entry as traders were taking negative delta positions. And also cumulative volume delta was falling. So more and more aggressive sellers. And then finally, price does not make it back up to the 4480 level. And finds resistance at VWAP, that's the light blue line, and also point of control, the purple line. All right, so that's the short setup. Then let's go back to Hero. So we know traders started taking positive delta positions really around 10:10. Hero made a series of higher lows and then really took off, and then price responded about 10 minutes later. So from the initial move higher, or the low in Hero, it took an hour for S&P 500 to make a low and move higher. So a divergence long, again, just like yesterday. Price finds support at the lower daily expected move, and aggressive buyers start to come in. Whoops, wrong tool. So you can see the aggressive buyers. Those are shown by the green volume dots. Those are buy minus sell market orders. You can also see the shift higher and cumulative volume delta. And it took quite a while, but price finally made it back up to the 4480 level. So divergence short, divergence long in the S&P 500 this morning. And then this sharp reversal lower. We'll take a look at Hero and see what options traders were doing. And in just a few minutes. All right, let's go to NASDAQ now. And Slow Desari says, news just came out on Adobe stock responding. Adobe warns of critical Acrobat and Reader zero-day flaw exploited. Okay, so I think Adobe reports earnings later in the week. All right, so here's NASDAQ. So we saw when we looked at the NQ chart a few minutes ago that NQ found resistance at the 650 level. That is NQ 650. Let's go take a look at Hero for NASDAQ. And there really wasn't much of a clue in the options market for NASDAQ. I guess other than you could say that options traders really weren't supporting a move higher up until about 10:25, and that set up a divergence long right around 11:10, 11:15. And then after that, maybe 30 minutes later, options traders started taking negative delta positions. And we'll see in just a minute when we zoom into the current market that they started taking negative delta positions before NASDAQ dropped. And by the way, this is a combined signal for NDX and QQQ. Alright, so let's go take a look at Bookmap again. And here's the drop in the morning. Not a strong clue from the options market like the S&P 500, but order flow pretty easy to read. You can just see all the aggressive sellers coming in there. There were also some large traders selling with iceberg orders, shown by those icons there. And then there's a very notable shift to aggressive sellers, the magenta volume dots. Then for this divergence, hero divergence reversal higher, you can see at the same time aggressive buyers start to come in. The shift from pink dots to green dots, also large traders buying. These are pretty large for the NQ, especially 960 iceberg orders. That is an aggregation of 34 different executions. So overall, a steady series of buy iceberg orders. Large traders use those to hide their size. And a rally up to the NDX 400 level before price move lower. All right, let's take a look at some stocks, and then we'll take a look at the current market. First of all, here's Apple. Let's take a look at Hero. Go to Apple. All right, so this is showing that options traders were taking negative delta positions pretty much from the open. Let's take a closer look and see exactly what they were doing. So they were selling calls, and that activity has continued. Let's zoom in on this. So in the morning they were selling calls, also selling puts. That's shown by the positive number here on the blue line. So the blue line is showing puts. A rising blue line indicates traders are selling puts, and a falling orange line indicates they're selling calls. So options traders selling volatility ahead of the event. Let's go back to total signal, go back to Bookmap. So we know that traders were taking negative delta positions, especially selling calls. That led to a great short setup in Apple today, reversal at the 180 level. Let's go back to Hero. Let's see if that was so 180 is the key gamma strike. So the key gamma strike shown here at 180 did act as resistance. Then 175 is the put wall, potential support level. Let's go back to Bookmap. So here's the 180 level. Key gamma strike did act as resistance. And note the order flow is pretty, just looking at the volume dots is pretty bullish here. A lot of aggressive buyers, but options traders, especially call sellers, definitely driving price today in Apple. All right, I had a couple of other stocks I want to take a look at. The next is Meta. Let's go take a look at Meta. Zoom in on this. Slice and dice, and we see that traders are selling calls in Meta as well. And they're also selling puts slightly. That blue line, put line, is slightly positive, but it's insignificant compared to calls. 1.17 million versus minus 83 million for calls. That's the notional value. Call sellers driving meta lower. Let's go to Bookmap. Meta, pretty similar chart to just more choppy, deeper pullbacks for Meta. All right, the next I want to take a look at is Microsoft. Another pretty similar chart pattern. Take a look at Microsoft. And again, call sellers, driving price. All right, so three great shorts in Apple, Meta, and Microsoft. Ahmed C asks, how do you decide when to get out of a trade when it either hits my profit target or my stop loss? And Vihu, hello, welcome, glad you're here. He or she asked, does the CPI inflation data event make any impact on options data for index and options? Yeah, so if you missed that earlier, I took a look at the options chain for, let's go back to SPX. So today, based on the options data, this is how I calculate my daily expected move. So this number for today at the close yesterday was plus or minus 20 points. And the number for today, tomorrow the CPI report is right now at plus or minus 31 points. So a 50% increase. I'll take a look at that number at the close today, and I expect it to certainly be close to 30. So a pretty significant increase in the expected daily move between today and tomorrow. So yes, the CPI inflation data report does have an impact on options. Hope that answers your question. All right, Ahmad C. Sorry, I'm sure I'm not pronouncing that correctly. Do you decide your target based on Spotgamma levels? I decide my targets based on Spotgamma levels, liquidity levels, and round number levels. And it depends on the instrument. So most likely for a stock, it's going to be a liquidity level, high liquidity. And for the S&P 500, it is going to be any one of those three: Spotgamma level, also expected moves, and round number levels. All right, let's take a look at the current market now. So there were some comments and discussion about the move right around 130, and note so this move, sharp move up, this could have been something in the Apple event. Not sure. I I didn't see anything in my news feed. I wasn't watching it closely though. But notice they started taking negative delta positions. They started fading that move pretty sharply. And it took a while, maybe about 10 minutes before price started to drop lower. So definitely a lead effect in the options market for ES as options traders continue to sell highs and buy lows. They continued that mean reverting activity. And it looks like now they may be starting to take positive delta positions again as price has reached a low point. So if Hero starts to make higher lows, then we may look for price to move higher. So let's go take a look at Bookmap now. Go back to ES. All right, so there's the sharp move higher. And remember, options traders started taking negative delta positions. This looks like a stop run. You can see the yellow line there. Sharp move higher in the yellow line. That's showing buy stop orders. Also shown here with these, let me clear that. Small green dots, 885 buy stop orders, 673. Large traders fading that move initially with iceberg orders. That's not extremely large for ES, but aggressive sellers start to come in. You can see the shift from the green volume dots to the magenta volume dots. So those are buy minus sell, market buy minus sell. All these traders on one side of the boat, and then the boat tipped over and aggressive sellers came in while options traders were taking negative delta positions. When options traders take negative delta positions, options market makers take the other side of that and they have to sell futures to hedge their delta exposure. So again, this sharp move higher could very well be related to the Apple event, and the sharp move lower as well. Let's take a look at NASDAQ. Very similar order flow. Stop run, shown by the rising yellow line. Also aggressive buyers up to the NDX 400 level. Aggressive sellers start to come in. And then the shift to all magenta dots. Price reverses lower at this cluster of levels here, the 400 level. That's NDX 400, the 390 volatility trigger. NQ 600 level, also the volatility trigger. So this cluster of levels, this shift from aggressive buyers to aggressive sellers, and let's see what the options traders were doing. We'll take a look at Hero for NASDAQ. Zoom in a little bit on the afternoon, and just like the S&P 500, options traders had already been taking negative delta positions, and then they start, after a little pop, start taking negative delta positions again, and price reverses lower. All right, Frank wants me to take a look at Tesla. Sure, be glad to. Let's go to Tesla. And remember, Tesla had a big move higher yesterday after an upgrade. Before the market opened, Morgan Stanley upgraded Tesla, big move higher. That move did continue this morning. Zoom in a little bit more, just looking at the morning. Traders buying calls. That's shown by the rising orange line. They initially were selling puts. Then that activity stopped. The blue line just flattens out. And when they start selling calls, price responds lower. So when traders buy calls, market makers sell the calls, and they have to buy stock to hedge their delta exposure. And then when traders sell calls, start selling their calls, they can sell some of their long stock hedges. So call buyers and sellers clearly driving price in Tesla today. Let's zoom out. And note that after that sharp reversal, traders have continued to sell calls, and they're also actually net for the day selling puts. The blue number is positive, but still now starting to decline. Let's go take a look at Bookmap. So this reversal lower was right around just right at 10 a.m. Let's go to Bookmap, go to Tesla. So you can see the shift in order flow here. A lot of aggressive sellers start to come in. Good entry point for a short, right at the 277 level, just before 10:30. As Tesla makes a lower high, options traders started taking negative delta positions, and price makes a series of lower highs. Next entry around VWAP and the 275 level, and Tesla continues to make a series of lower highs. All right, let's go back to the S&P 500. Let's go check and see what options traders are doing. Let's just check for the day to see, get some more clarity. So this is pretty typical of the S&P 500. Traders are buying calls, shown by the rising orange line, positive notional value. They're also buying puts, shown by the falling blue line, and the negative notional value. Let's go back to the total signal. But I would certainly not be looking for a long today with this hero line dropping so sharply. Traders really looks like the call buyers are taking their foot off the gas, and the put buyers are stepping down on the gas. Let's just take a look at the 0 DTE trades. Sorry about that. All right, so it looks like this notional value for the 0 DTE traders, that's pretty large, minus 1 billion, more aggressive than the all expiration trades. So this is all expiration shown with the purple line. The next expiry, or for the S&P 500, this would be 0 DTE, more aggressive with negative delta positions. And you can see the mean reverting price action or activity of the 0 DTE traders, buying lows and selling highs. Let's go back to the total signal. All right, so Slodor Sorry says the Apple event is over. Adobe's still falling. Yeah, sorry, I don't have Adobe in Bookmap. I can't take a look at that. S&P 500. Let's go back to Bookmap. So the way I see this, it looks like the S&P 500 has kind of been a no man's land here between this lower daily expected move that it did act as support earlier today, and then now below the SPY 447 level. Let's take a look at NASDAQ. Also in a bit of a no man's land here between QQQ 373 and 374. Let's see what options traders are doing in NASDAQ. All right, so it looks like the hero line has leveled off. Maybe starting to rise a little bit. Check on Apple. Overall, though, today, options traders taking negative delta positions. Hero continues to make lower highs, negative notional value. So it appears that Apple traders are unimpressed with what Apple presented at the event. Let's see, let's take a look at Adobe. I don't know how active the options market is in Adobe. So pretty good signal here in Adobe. Note this flow alert that came in just after 11 a.m. Eastern Time. So traders have been buying puts all day, shown by the following blue line, negative notional value. Also selling calls, shown by the following orange line, negative notional value. All right, Frank, you're welcome. He asks, since SPX is below the volatility trigger at 44.80, does it indicate SPX drop toward this Friday options expiration? So above and below the volatility trigger, I think well, first of all, Spotgamma may have statistics that show a slightly negative or bearish bias below the volatility trigger and a bullish bias above. I look at that as simply what to expect as far as volatility and a trading range go. So big rallies can occur in a negative gamma environment below the volatility trigger. And so again, I look at the position of the index, SPX, ES, SPY, QQQ, NDX, look at the relationship of the price to volatility trigger as basically a basis for the expected trading range and volatility. So I don't think that has any indication of a drop this Friday. So what does have a potential implication for a potential drop after Friday is a very heavily call dominated positive gamma expiration. Let's go back to let's take a look at SPY. Just but it's a little bit more clear. So this call, delta notional, a lot of those calls are going to expire. This is in a call dominated environment that tends to support tighter trading ranges, more of a range type market. Those calls will expire and opening up the S&P 500 to potentially more volatility and potentially a drop after expiration. Just the opposite of a negative gamma put dominated expiration. You can expect a rally as all those puts expire. Market makers can buy back short hedges. Just the opposite for a call dominated positive gamma or more neutral environment. All right, so Frank, I hope that answers your question. So we'll keep an eye on this, especially after the CPI event tomorrow. Keep an eye on this expiration concentration as well as the gamma notional and the relationship of the different index products to their volatility triggers. Let's go to Bookmap. All right, so NASDAQ still chopping around below the 374 level. S&P also chopping around below the SPY 447 level. All right, I'm going to wrap it up for the day. My time is up. I want to thank everyone for watching. Thank you very much for your questions and comments. Remember, CPI data tomorrow morning could be a market mover, although there's not, depending on how things end up today, there's not a lot of put Vanna fuel in the tank like there was last year. So the expected move again for SPX, the last time we looked at it, was about 31 points. So we'll check that at the close today, and then we'll take a look at, we'll talk about it tomorrow afternoon. So thanks again. Thank you very much for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.